welcome to today's live technical analysis. We're going to be starting off by just fixing up our chart. So at the toolbars, time frames, we're going to be removing the period time separators as well. More overview, a complete view essentially of our charts and what we are going to be looking at today. So starting off at this point in time, ECB President Lagarde is due to be speaking. Therefore, we're going to be anticipating perhaps some market reaction from the euro dollar pair. So we're going to be keeping a close eye on that. As of now, based on the pre-existing technical analysis, it appears to be moving in a downward trajectory, validating our downwards moving trend line, which just needs to be slightly altered on here. It's broken below our previous support level at 1.07650. RSI running along the figure of 13, implying a strong bullish market sentiment. In addition to remaining below the mid-range of the Bollinger Bands, I would not be surprised if there's a small market correction, perhaps to the mid-range before moving lower. But as you can see, it's all pointing towards a downwards moving fashion. Below the mid-range, downwards moving trend line, RSI. If we go into the daily, small rebouncing here, then moving lower for the day. Yet the comments by ECB President Lagarde today could potentially cause the pair to reverse its trajectory. Why? ECB President Lagarde is a key policymaker, therefore what she says may have a significant impact. We note that yesterday during her speech, she left the door open, perhaps more rate hikes, or perhaps might remain on pause. It was indecisive. Yet indecisiveness might be fueling speculations of a stagflation in the Eurozone economy. Therefore, the inflation levels may remain at current levels, perhaps persistent inflation. We might have an increase in unemployment, which could all lead to the Eurozone moving towards a recession. But for now, we're maintaining a bearish outlook. I'm actually going to keep this on the 1 minute chart. We're going to be doing a technical analysis in just a moment. Actually, we could do the technical analysis now, given that ECB President Lagarde is also speaking. So right off the bat, I would be bringing my S1 at the 1.0730 level. As you can see, the opening and closing of the bullish and bearish candles are indicative of, I'd say, a significant support or resistance level, depending on the way you're interpreting the chart. But for me, this is a resistance level, so R1. I would be bringing R2 at the top of this bearish moving candle. So there was a strong bearish market sentiment that resulted in a big action, so moving in a downward trajectory at this point. Therefore, I would be anticipating that there may be sell orders. Therefore, should it reach back up to this particular level, I would not be surprised if it meets heavy resistance. Now, for R3, we could bring it at this point, touching this wick here. Perhaps we could even use the opening and closing of this bullish and bearish candle. I would be placing it at the 1.0930 level. Actually, slightly higher. So in order for that to be appropriate, it would be 1.0932. This level would be at the 1.08645. So we'd need to move our support level from S1, bring it towards a lower point. Just need to fix up our chart just a moment. Let's look for support at S1. It's currently at moving lower. Note how I'm trying to line the bearish and bullish candle closing and open right around here. Broke above, came back down, validated the wick. We have in place around here, so validated by the wick, then moved higher again. So this would be my S1 at the 1.040 level. I'd keep S2 and S3 the same. So looking at our chart at this point in time, as you can see it's moving to test our new support level. Now, as a matter of fact, S3 could be perceived to be far too uh, wide, perhaps, and S2 could even be slightly too close. So, in order to bring it slightly back up, close that gap between S2 and S3, the 1.070 level, let's just see. And then we'd need to bring S3 to our level. As you can see, the difference is far too wide for my liking. So I'd bring S3. So I'm trying to see if this is validated again. Perhaps, but I'd keep it at the 1.0545 level. There's a bit there's a bit of a difference between S2 and S3, yet that's what the chart is telling us. So right now we're anticipating the speech by ECB President Lagarde. So we move into the 1 minute time frame. We're just keeping an eye on this. So basically, we're having a number of ECB policymakers speaking today, which could impact the pair's direction. So if Vice President de Guindos, for example, which is due to speak later on today, has a more of a hawkish sentiment, and then ECB President Lagarde was perhaps undecided or neutral tone, and then we have other policymakers who are slightly more hawkish, then we might see the market potentially reacting to those hawkish or dovish remarks if the sense of neutrality is sensed from ECB President Lagarde's speech. So we're going to be moving towards the Aussie dollar. So the RBA remained on hold. It surprised markets, yet in reality, the economic situation in Australia does make some sense for a pause. I think the RBA is more willing to remain on pause, considering that they're changing governor as well, with, if I'm not mistaken, Deputy Governor Michelle Bullock taking over. It would make, in terms of politics, some sense to maintain current interest levels, allow the new governor to ease into their position, take stock of what's going on, perhaps before deciding her own decision. I personally, as a central bank governor, would not make any rash or big moves if I was outgoing, as was the case now. I keep things the same, allowing the new governor to make her own decisions and dictate the current level of interest rates. Yet, the pause is not surprising on a monetary level as well. Why? They're taking some time to assess the full impact of the interest rates on the economy. So I think the RBA might be more worried about over hiking. So this is the current issue with the ECB and the Fed, who are more willing to overhike than underhike. Therefore, they're more willing perhaps to push the economy into recession in order to bring inflation down rather than allowing inflation to remain persistent for far too long. But it appears that the RBA might be slightly more concerned. And on a technical level, so on our 4 hour chart, we could even say that this was moving in a sideways fashion. If we bring those wicks, as you can see, nicely presented by our support level that we had. So you see the narrowing of the Bollinger Band, implying a sideways moving uh, market, but it would have been validated at this point in time. So it may have started from here, but the sideways moving channel would have been validated right around here. So if it does not make a clear break below, I would expect the pair to move in a sideways moving fashion. So we're bringing back down S1 at the 0.65 10 level. So this would be my R1. But the RSI is also at the figure of 30, implying a bearish market sentiment. So you can see it's broken below the lower range of the Bollinger Bands, therefore might be due for a small market correction higher. But if it does make a clear break below S1, I would not be surprised if it moves towards S2. But if it comes back up into our sideways moving channel, then we might see the pair remaining on moving in a sideways fashion. So there's a 1 minute. On the 30 minutes, a small break below, but I'd like to see a clear break below on the 4 hour chart. There is a bit of a break, but it's still moving in upwards fashion for now. So based on what I'm seeing, though, I would maintain perhaps a bearish outlook for the Aussie, as the interest rate decision was disappointing for traders. As moving in downward fashion up to S2, next target being S3, but if it fails to break below, moving in a sideways fashion. When we're looking at gold, so for gold, we can see an upwards moving channel that was broken during yesterday's trading session. So it started on the 21st of August, approximately moving higher. So you can see it's validated on numerous occasions. And then it broke below during yesterday's trading session. Yes, yesterday's trading session, failing to capitalize on perhaps a weaker greenback, and has now broken below our support and resistance. So for S1, we're bringing at the 1920 level, 21 to be precise. Then I would be bringing S2. Just note how it's coinciding with the bullish and bearish candles. Then this bullish candle moving higher, 1902, 1903 in order to be slightly more accurate. Because that we're gonna have to keep it as it is, 1902.50. And then for S3, this would be for the day, 1885. Small error on my part. There we go. So on a 4 hour, RSI breaking below the 50 level could imply the switching from a neutral to a bearish market sentiment, perhaps a slight downwards moving trend line, but it could even be this is still far too soon and too narrow, therefore invalidated. Moving in a downward fashion, perhaps moving back to S1 before moving higher. But for now, I'll maintain a bearish outlook perhaps for the day. We're going to be looking at the dollar CAD. So we're looking at the dollar CAD as we're anticipating the BOC's interest rate decision tomorrow, with the markets anticipating the Bank of Canada to remain on hold, so on pause. It broke below our upwards moving trend line. So see on a technical level, major support at this point. Very strong bullish candle. And then S3. This would be minus 3, 1.3430. Now, the Bank of Canada may remain on hold. If it does remain on hold, I would expect the dollar to gain against a weaker CAD. Yet we should also note that the Canadian dollar is also impacted by the price of oil, which I'm going to be checking as of now is moving in a downwards fashion. Therefore, given Canada's status as a major oil exporter, lower prices of oil could mean less demand for the Canadian dollar, therefore, further weakening of the CAD, allowing the dollar to gain against them as well. So we're going to be looking for R1. It's currently above 1. 1.36. We're going to be keeping it at 1.3659. It's currently aiming to test resistance at R1. The difference between R1 and R2 is slightly too much. So we're going to be bringing our R2 to a more closer resistance level. Still too close. Far too close. R2 needs to be higher. So this would have been support and resistance. 1.379, 1.31720. And then R3, turning point at around here. 1.3775. Bit too close nonetheless. So we're going back and forth because we're compacting our chart. So this looks relatively okay. Yet if you see the price action on a forward chart, this would be broken perhaps almost instantly. So we need to once again readjust, perhaps keeping R2 and then moving R3 higher. So R3 will be at the 1.3859 resistance level, and then R2 1.3773. Currently maintaining a bullish outlook for the pair, yet this could be also an upwards moving trend line. RSI near the 70 figure, implying a strong bullish market sentiment. And I would not be surprised if it moves higher and aims to test R2 at 1.3773. Yet, if the Bank of Canada surprises the markets and hikes, then we could see it moving towards to test R3. I have another resistance level. Let's just make sure that that was the correct one. Nope. Now that's fixed. So maintaining a bullish outlook for the pair. We're going to be looking back at the euro, seeing if there were any significant market movements. ECB President Lagarde is speaking, so on the 15-minute, perhaps, as you can see, still moving at a downward trajectory. On the 30-minute, it appears to be getting some support. The 1 hour slightly moving higher. On the daily is moving in a downwards fashion. On the 4 hour, seems to have found some support, yet still within the margin of a bearish outlook for the pair. So since this is live, I have no idea what ECB President Lagarde is saying at this point in time. Yet, if she had said something major, then we would have seen something essentially on the 1 minute chart. A sideways fashion perhaps could imply that nothing too major, or perhaps providing more neutral outlook during her speech. Perhaps not hinting that they're going to hike or that they're going to remain on pause. Something perhaps a bit of both, I'd say. We'll be looking at, well, we adjusted gold, so moving in a slightly downwards fashion for the day. We could look at oil. So personally, I think this on the daily. So oil is an interesting story. There are market expectations that Saudi Arabia's oil cuts will continue well into the year. You have China implementing new policies such as the interest rates for first-time home buyers in China, in particular Shanghai and Beijing, if I'm not mistaken. Then you have them trying to entice more people to spend, so reducing the banks to provide more loans in order to increase consumer spending in the economy by lowering the amount of FX reserves that financial institutions are required to hold in as reserves, essentially. Therefore, perhaps allowing a more leeway for them to increase loans, providing some liquidity into the market, so boosting economic growth. Now, this all together could provide support for oil. Given China's status as the world's largest oil importer, an improvement in the Chinese economy would in turn result to an increased demand for oil, therefore increased demand, therefore higher prices. However, on a more macro level, Country Garden barely escaped declaring bankruptcy, just barely. They were saved by their bondholders, if I'm not mistaken, a 50.5% vote or and a 40% vote against for something essentially providing some time to restructure the bond payments, etc., etc., etc. So this may provide support in the short run for the market. Yet, the fact that we reached this level where we're concerned about the housing market crisis in China, for me personally, is very worrying. Given what is going on a more macro level, I'm not convinced that China will be able to save its economy this time. I think that the structural problems, including the local government debt that is incurred by the local provinces, etc., and the fact that the Chinese government is greatly concerned, in addition to the rhetoric to the West, perhaps easing in hopes of less trade wars in order to perhaps stimulate growth as well, paints a paints a very worrying picture for China from my point of view. Because if we reach this level, that means that there might be more problems that meet the eye. I would expect, personally, I think that China might enter a recession by the end of the year, if not by early Q2 2024. Therefore, from a longer time frame, I would expect oil to move lower. But for now, on the 4 hour time chart, we're seeing we were seeing an upwards moving channel, perhaps being formed, which has now been broken. So this is support turn, excuse me, resistance turn support. C405. We're going to be keeping R2, which became R1, and R3, which becomes R2. We could also note slight upwards moving trend line. Could have been a second one here. The breaking below our upwards moving channel does not necessarily mean that we're switching to a bearish outlook. RSI is still above 70, well, just below at this point, which is still implying 65, which is still implying a strong bullish market sentiment, perhaps is a market correction to the mid-range of the Bollinger Bands, which coincides with S1. So moving lower to test S1, small market correction before moving higher. And now we're going to be placing our resistance level at R3. For that, we need to go back and right off the bat, around here. But this would be too close. So we're leaving about $4 in between each support and resistance levels. And this would be my R3. $94. Actually, it needs to be slightly lower. 93.59. 93.59 it is. So we're maintaining a bullish outlook for the price of oil currently on a technical level and a short-term fundamental basis. On a more macro level, so a more long-term fundamentals, I would expect the price of oil to move lower. We're also going to be looking at Airbus. I'm not surprised. Note that yesterday was a public holiday, Labor Day in the US and Canada. Therefore, the stock markets were closed. But for Airbus, I'm not surprised that it moved lower. There was a report that came out that they were sold, if I'm not mistaken, faulty parts or parts that were not up to par. Therefore, would make sense that market worries and perhaps future delays or perhaps a recall of planes or having to ship out replacement parts would increase costs for the company, therefore potentially moving the stock lower. Purely on a fundamental level, I would be maintaining a bearish outlook for Airbus and Boeing, and perhaps even Lufthansa, which if I'm mistaken, we do offer. Yep, we do offer Lufthansa. So maintaining a bearish outlook, but most noticeably, I'd keep an eye out on Airbus and Boeing, as it's stated that those planes are most likely to have been impacted. So 134.70. And then we'll be bringing our resistance level so I have to keep it fairly tight. 136.15. This would be our 3. Let's just readjust our labels. $134. If a recall is announced for certain planes, or it's announced that they're going to have to ship parts as a replacement, then we might see disruption in the air travel industry, therefore potentially moving these stocks lower. In addition to any industry, so Lufthansa, as we said before, potentially being impacted as well. And then I'd bring S2 129.40. RSI is moving towards 50, implying perhaps a switch to a neutral market sentiment, yet on a fundamental basis, as I've said, would be maintaining a bearish outlook for the stock price. Then lastly, 126. So this would be my S3. We could have said that it was moving in an upwards fashion, perhaps upwards moving trend line, or an upward moving channel is a bit far too tight. keeping our upwards movement line here, but on a fundamental basis, bearish outlook for the price. And with that, I think that does it for today. Thank you for watching, and until next time.
For today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat, and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Everest Fortune Group, who were finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number 2, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer a mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay, lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features. So it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience since it has all of the features required all in one app. Okay. I've briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is Metacode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So you mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, this feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it'll tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects, such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into backtesting. Okay, so what exactly is backtesting? So it's basically the use of historical data to test your strategy. Sorry about this, my throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So Of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for. Net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know. You would either have to repeat your testing, or change a variable, which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading. A lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your backtesting of your trading strategy, then you have a certain number of assumptions that you make off of those results, and not based off of whether you think that it's right or wrong. Okay. Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. one practical trick for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay. So first things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis, so purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for retracement, not retracement, sorry, projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm gonna get rid of the MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart. So feel free to let me know if you have any requests. Okay, if not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for our first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm going to pull out RSI. Okay, RSI isn't really telling us much. So I'm going to pull up stochastic. Okay. So for our stochastic, price, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. Oh, it's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes, so before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to the leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.